Hello, Oracles. Today we're going to be doing a stock gap analysis for NVIDIA stock and for Tesla again. Now, I know that I just did Tesla within the last month, but we've had some significant movements. So we're just going to kind of reassess what was going on with Tesla, see if we have filled any of those gaps. And we haven't done NVIDIA yet. So we are going to jump into NVIDIA. And if there's any other stocks that you guys want me to do a stock gap analysis on, please let me know in the comments below and I will bring that up. I also do those in my live stream. So if you guys are on my live stream on Thursday evenings, just hop in there, let me know a ticker symbol, and I'll be able to jump through it and do a quick stock chart analysis on that stock and ticker that you're looking at. So, of course, we know that this past year, NVIDIA, Tesla, Magnificent Seven, the entire stock market has been on fire. So, along the way, there have been many stock gaps that have been created. Again, as I always say, for those of you who don't know, a stock gap is when a stock price opens higher or lower than what it closed the day before. So, for instance, if a stock closes at $100 and the next day it opens at 105, there's a gap between $100 and $105. And now that chart has an unfulfilled gap. More often than not, it does end up filling that next day. Sometimes within the first 30 minutes of trading, it may move back to that level and then kind of go in whichever direction it wants to go from there, whether it bounces and comes back up or whatever it wants to do. But there's many times also that it does not fill over that day and it continues to run in one way or the other. And you can go days, weeks, months, even years before those stock gaps get filled. We saw that happen with Tesla in 2022, where there were many gaps that were 2 years old that ended up getting filled when it pulled down to $100. So these are just things to pay attention to. And again, when you're a long-term investor, these things truly don't really matter unless you're just trying to get an understanding for why the stock is moving one way or the other, or if you're looking for a new entry position and you're looking for a potential buying opportunity at a lower price, could be something to pay attention to when you're seeing sentiment turn and saying, hey, I've seen the sentiment turn. What level do I think it could potentially come down to? You could pay attention to things like that. So that's really what it's important for long-term investors. For short-term investors, swing traders, anybody who's playing options, it's going to be important to pay attention to anything when it comes to stock chart analysis, and gaps are one of those things. So that's why it's important to pay attention to this, and gaps do fill 9 out of 10 times. So not to say that these gaps have to fill, but historically, 9 out of 10 times they do fill. So it is something to pay attention to. And for those of you guys who have been with me for a while, when we were going through that 2022 collapse, I called a lot of those gaps. A lot of people were calling me crazy. I got a lot of shit for it all. But guess what? I was freaking right, strictly because of those gaps. So I didn't want to be right. I don't want the stock to pull down. I'm just saying these are out there and it's something you need to pay attention to. And if it's not on your radar, you're really doing your own self a disservice by not paying attention to the potentials of these gaps that are out there. Now, gaps do go on the upside as well. There were gaps above Tesla that we knew were going to get filled, and we ended up filling that. So we had a gap up at 295 and another one at 380. We filled both of those. And again, those were a couple of years old that they were in the making. So this is just one of those things to really truly pay attention to. All right, so we will take a look at NVIDIA stock and the gaps that we have created here. So just looking at the chart right off the bat, it looks like it's on a dead cat bounce, but could be potentially creating a bull pennant. So this could end up breaking out. So that's one of the things to pay attention to. But looking at the stock gaps by themselves, we do have a gap that comes down here to 119. This here was created in early October. So that was relatively recent. And again, looking at the way the stock is moving right now, we're not all that far off from it. So if we end up getting that Santa Claus rally going into the end of the year, I would pay attention to what's going on with earnings and Trump taking office to see if this is going to pull down and fill this gap. Below that, we go back to May of this year and we have a gap down to 86.22. And then we've got a big gap going back to February 21st of this past year, going back down to 68.87. And then a couple of very small gaps here, 63.17 on February 1st, and then 59.89 on January 23rd. And then you go back to November 1st of last year, we have a gap down here to 42.37. And then this giant gap that's down here to 30.59 from May 24th. Now, for you guys who've been following this stock gap series, you know that May of 2023 just happened to be a time where there were a lot of gaps that were created. And this is one of those. So again, look at this being about a year and a half old, knowing what happened in 2022 when we had a lot of gaps very similar to these that were all created in 2020 after the COVID crash. When we saw that massive bounce up, lots of gaps were created. Most of those gaps got filled in 2022. Now we're seeing a massive run over these last 2 years, and we are seeing a lot of gaps getting created again. Do you think that potentially, if we get into a recessionary period in 2025, we may come down and fill all of these gaps? Now, seeing NVIDIA pulling down to $30, do I think that's realistic? I don't know. At this point, when it comes to the market, I can't say realistic or not. Anything is possible. And I know for sure if NVIDIA pulls down to $30, I'm going to be backing up the truck and loading up on this. However, I don't know if this is going to get filled. This is just one of those things that's on my radar as a possibility. And now people say, oh, it's crazy. There's no way things are like that are going to happen. But I've done the math on it when we were talking about the NASDAQ pulling down to fill some big gaps below. This year, if NVIDIA pulled down from current levels down to that $30 level, that's a 77% drawdown. Now, for NVIDIA, that's pretty significant. But if people are thinking we are in an AI bubble and maybe NVIDIA went and ran way too much, maybe 77% isn't out of the question. Think about 2022 when we saw some of these massive Mag 7 companies pulling down 50, 60, 70%. That's right in that realm right there. So, again, I'm not going to take it off of the radar entirely because we've seen it happen relatively recently. So, to think it couldn't happen again is kind of absurd. So, just making sure that these things are possible. And if it does, it's one of those mentalities that is very hard to break. So many people are like, oh, why would it crash? And then you get upset when it's pulling down. Like, were you planning on cashing out on Nvidia stock tomorrow, like a winning lottery ticket, and you were planning on, not ever having to work again? Like, what is your thesis behind your investing? This is the big question because if you get really upset that a stock price is pulling down because you don't think it should be pulling down to those levels, like, were you planning on selling tomorrow? Because if you weren't planning on selling tomorrow, what was your plan? If you're just planning on waiting longer term, why does it even matter? If you were planning on adding more shares and you wanted it to go up even higher and make even more money, then pulling down to those levels should be exciting times for you to buy more at a much lower level. So the whole psychological mentality behind all of this needs to get reversed for so many people because what is your thesis long term? Anybody who gets upset by you seeing a stock price pull down because they don't think it should be pulling down to a certain level, why does it matter? Why does the stock price in this very specific moment matter? It's all emotional, all of it, because you don't think it should be down to that level. So again, what is your thesis? Were you planning on selling tomorrow? If you weren't planning on selling tomorrow, who freaking cares? So that's just my 2 cents on that one. A little bit of my tough love because it realistically should not be thought of that way. If we see a 77% drawdown on NVIDIA, should be a very exciting time for us to back up the truck. Now, if it pulls down that 77% because something collapsed entirely with NVIDIA, it's a totally different question. But if you still think that NVIDIA is the same company today that it is when it pulls down 77%, then you're getting that company at a 77% discount. Why would you not be excited about that? It's like going into the store and getting groceries at 77% off. Would you be upset if your groceries are 77% off this week? Absolutely not. You'd be super excited because, like, holy crap, I have more money in my pocket. Exactly. I could buy more steak for less money. I could buy more veggies for less money. I can buy all of this great stuff for less money. Why do we not think about that when it comes to stocks? So, before you guys all get upset with me about all of that, think about that and put that mentality into your own brain and realize that's an awesome opportunity if it happens. Now, again, I'm not cheering for it to happen. I'm just saying that's on the radar as a possibility. And if it happens, I would be excited. All right, so now we'll take a look at Tesla here. And we didn't have any gaps that got filled that were created over this past month when we had that massive pull down, because this little gap that had been created here was filled the next day. So this one here was already done before the pullback. So now as we're dropping down here, again, as I said, we had a bit of a bounce on Friday and then we ended up turning red on the day. So now we're at this $420 level, which of course the symbolic irony behind the 420 and us having that kind of be the stopping point on the way up, and now we're bouncing on it on the way down, is going to act as a level of support, but it wasn't a very strong support. So now the question is going to be, do we end up breaking down below this, or does the Santa Claus rally push us higher into the end of the year, and then we can kind of reassess from there? So when you start taking a look at the gaps that are coming down below us, there's a lot of them. So we've got this gap down here at 358 that was created on December 4th, another one down here at 345 that was created on November 29th, another one here that was created on November 15th at 324, and then of course we got the election gap that was created down at 255, and then the earnings gap that was created down here at 218. So I keep on talking about this 218 level here. This run was massive. Not to say it wasn't justified because a lot of good news, but I think we ended up having this bump here because of Elon confirming the Model Q coming out next year in the second half. So now that is what Wall Street was looking for, was that next model vehicle that's going to hit a larger total addressable market. That is what this excitement was here. Then you've got the election excitement, which, there's a lot of companies and stocks that have a lot of sentiment driven behind it. None of this run here was based off of fundamentals. Yes, along the way, we got more confirmation that it was actually called the Model Q, things like that, but nothing that actually changed anything from what we heard over here at the earnings call. So there's a lot of money that was put into this based on sentiment, and that's pulling forward a lot of earnings. So now all of this here is going to be future hype that is built in. Tesla's going to have to come through on this. And one of the things that I have learned from being in retail is when you tell a consumer or anyone else, hey, we're going to have this price be between $100 and $150, mentally they're going to think $100. When they hear, hey, we're going to be there between 1 and 3, they think you're going to be here at 1. And when you don't show up at 1 o'clock and it's 1:30, 2 o'clock, the consumer starts to get upset and say, where are you? And you're like, well, I give you a window of 1 to 3. I still actually could be an hour early. I have another hour. That's not how the consumer thinks. So very similar to what we're seeing right now with Tesla, where Elon said in the first half of next year, we're going to see this model coming out. A lot of people are going to be thinking we're going to see it in Q1. That is not the reality. Best case scenarios, we're going to see at the end of Q2. More realistically, we are going to be seeing it coming out in July of next year. So to kick off the second half of next year is most likely when we're going to see this Model Q coming out. We also have Troy Tesla coming out saying that realistically, the price of this vehicle is going to be higher than $30,000 initially until we start getting ourselves to volume production, and then that price can come down. We also have to have interest rates coming down. That will end up lowering the price as well. We need more pricing power getting built in. So I think a lot of the excitement behind this is justified, but I think the excitement is really on the very perfect end scenario of we're going to have this vehicle coming out. It's going to be under $30,000. It's going to be out in Q1 of next year, and they're going to be volume production right from the get-go. That's a lot of what is getting priced in right now, plus FSD being solved next year and cybercabs, which aren't even going to hit the roads till 2027. A lot of that is getting priced in. It's very similar to what we saw in 2020 and 2021, where there's a lot of future potentials getting priced into the stock, but there was nothing to back it up. I think that's very similar to what's going on with a lot of the AI plays right now is there's a lot of future getting priced in, but there's not any dollars coming in to justify that with their earnings. That's what's happening with Tesla. So a lot of people are pricing in this Model Q when realistically we aren't going to be seeing any dollars coming in from it until the second half of next year. So when we end up getting to that reality, I think we're going to see the stock pulling down. That's why I think we're going to end up coming down to fill that 218 gap, on top of the fact that we may potentially get a recession next year based upon what's going on with jobs and other economic uncertainty. Those two things together, I think, are going to drive us down to that 218. When we get down to that 218 level, that's where we're going to have to assess and say, all right, well, where's the market sentiment at? Where are the fundamentals at? Where are we at with the Model Q? Where are we at with FSD? Where are we at in the recession? Then we can decide, all right, are we going to fall further and fill that 146 gap? Or is that 146 gap going to remain unfilled and go up from there? And now just to scare you all a little bit more, there is a gap that goes down to 110. So just hate me a little bit more because of that. But going back to what I said about NVIDIA, if you'd be upset if it's down at that price, why? Why would you not be excited to buy at those levels? So that's just my thoughts on what's going on with Tesla. And again, I'm a Tesla investor. I don't plan on selling any shares from here. I just want to be adding more shares over time. So if we get an opportunity to come down lower, I would absolutely love to be able to back up the truck and load up more. That's going to be my plan on that. But for right now, I'm just looking at the fact that these gaps exist. I don't know if they're going to get filled, but they're on my radar. And if we do start filling them, I'm just going to kind of track it and see what's going on to see how much more I want to add to my position. So that's it for those two stocks right there. Let me know again in the comments below if there's any stocks that you want me to do a stock gap analysis on. I will gladly do those. I'll see what we're going to be doing for next week. I hope you guys enjoy the holiday. Thank you so much for watching. I appreciate all the support. Have a great one.